Good afternoon, everyone, and welcome to another episode of The Debt Life with me, Chad Van Horn. Today's topic, mortgage forbearance, CARES Act protections are ending, and what do we do next? First, I want to give a shout out to John Oliver. Did a great special on HBO this past week as far as bankruptcy protections, some of the limitations, some of the issues that we're dealing with in the bankruptcy industry. Very rarely does bankruptcy get national exposure, national attention, but it's really, really an important system that helps millions of people every year. And I know coming out of this pandemic, a lot of people are going to need that assistance. We're going to talk a little bit about how bankruptcy can protect your home after the mortgage forbearance ends and the CARES Act protections end. So shout out to John Oliver. Thank you for doing that. Now let's jump into it. So the CARES Act is set to end the end of June. So we're approximately 2 months away right now. And right now is the time that you need to get organized into what are you going to do if you are in forbearance. You need to get with your bank, get all of your financial information organized just in case it's not extended, because there is a chance that it might be extended depending on where we are with this pandemic. People are going back to work. The economy, it seems to be opening back up, at least down here in South Florida, and getting back to 100%. So when that comes up, if you are already in foreclosure, you gotta be very, very careful, because you're the one that's closest to losing your home. If you just went into the forbearance, you have a little more time, but you should start to act now. So let's go through a couple of the options. Your first option that I recommend if you're in forbearance or in foreclosure is loan modification. So loan modifications were huge back in 2007, 2008, but they weren't as effective as they will be now, in my opinion. The reason being, in 2007, 2008, when the bubble burst, not as many people had equity in the homes that they owned. Now that there's equity, especially in South Florida, where prices have gone skyrocketing over the last year and a half, you're going to have equity in your home. So loan modification is really going to help you save your home. So basically what a loan modification is you negotiate something directly with your lender that says, okay, I was behind, or I was in forbearance. I need to get caught up on those payments. Here's how we're going to get caught up. And sometimes you got to come up with a little bit of a lump sum. Sometimes they'll put it on the back end. Sometimes they'll even lower the interest rate down to as little as 1% and then do a step up. So there's multiple different loan modifications. So who's eligible and what qualifies you for a potential loan modification? Really, anybody is eligible for a loan modification as long as you haven't had more than 3 loan modifications is the limit that I see most banks put into consideration, and you haven't had a loan modification within the last 2 years. So 3 loan modifications over the length of the loan, and you haven't had one in the last 2 years. I see some people are already questioning, or Facebook people. I understand the picture is a little blurry. Sorry about that. Hey, Uncle Tom, how are you doing? If you have any questions on Facebook, please just ask. I'll make sure that I answer all of your questions as we go through this. So let's go back to loan modifications. Pros and cons of modifying the mortgage. The pro is it's going to get you current. Most loan modifications are going to put fees, everything on the back end, the cost on the back end, get you current, could potentially lower your monthly payment, at least in the short term, maybe for the length of the loan as well. Some of the cons, you got to be careful. If you fall too far behind, especially in your mortgage, a lot of interest, fees, costs eat away at your equity. So you don't want to let this go too far. We're going to talk a little bit about when the best time to apply is, but you don't want to let this go too far, because attorney's fees, foreclosure fees, all these fees add up. And if you have equity in your property, then that just takes away from the money that you'll receive whenever you do end up selling your property. A couple reasons why you might be getting denied when you apply on your own, and why you might need to use an attorney. I always recommend working with a professional, whether it's an attorney like we have at Van Horn Law Group, or working with an accountant or somebody else. We know what the banks are looking for as far as debt to income ratios, as far as that disposable income ratio, which is 31 to 38%. So you really want to put your best foot forward first instead of going through the appeals process. Your best chance to get a loan modification is on your first application. Subsequent applications have lower success rates. So when you're getting all the documents organized, you want to make sure you're putting everything in a nice, neat package where the lender can say yes to it. If you're outside of some of the norm, once again, that 31 to 38%. And you can also take, with that 31 to 38% ratio, and what I'm talking about that is, if you have a payment of $1,000, your income needs to be around $3,000 to support that $1,000 payment. And there are ways to get there, even if your income's not there, through family support or other people living in the house, or if you're renting out rooms. I mean, it has to be you have to be able to document the income, but there are ways to make sure that you're going to get the best chance at getting that loan modification. Um, I do have some clients that are successful on their own. I have others that they come in after they've been turned down, and we go through the appeals process and work it out. So if you are looking to save your home, make sure that you give yourself the best chance. Good morning, Steve, Yasmin, John, Susan. Thank you, Christina. Thank you guys all for joining. Thank you for the questions. I'm going to make sure that I get to those shortly. Moving forward, let's talk about some other legal options. If you have been served with a foreclosure, which generally speaking happens after 4 to 6 months in default, you need to make sure that you slow that foreclosure down to see what your best options are. At that point, you should certainly still look at loan modification options. If you have the ability to reinstate, you can certainly do that. Reinstatement means getting all the past due money together, paying it, and then you pay your mortgage current moving forward. Or your third option would be to sell the property. As I said earlier, property values are up in South Florida and throughout the country. So if your property value is up, you might want to look at selling it with a realtor. We're not talking about a short sale where you're selling for less than what you owe to the mortgage. And the worst thing you can do is just delay the foreclosure for no purpose. If you don't have equity in the property, that's one thing, because you can buy yourself time to maybe save some money up for your next move or whatever you're going to do. But if you have equity in the property, the more you delay, the more equity you're losing. So I know a lot of attorneys out there do these monthly payment plans and different things where they'll delay the foreclosure for you. But that's not necessarily benefiting you. You need a resolution, especially if you have equity, because if you're just delaying it, you're paying an attorney to delay it. Also, you're paying the lender's attorney. It's gathering interest, collection fees, all other kinds of fees are going in and just eating away at your equity. So don't just do foreclosure defense for the purpose of doing foreclosure defense. Don't do anything with regards to something as important as your home without having a specific goal. And if you need to talk through the different issues, I'd be happy to meet with you. We do free consultations all the time. Before we get into the next topic, I want to take a couple questions here. Christina asks, how long will it take me to qualify for a home loan after filing bankruptcy? So this really isn't a mortgage forbearance question, but this is a good question because a lot of people think you file bankruptcy, you're never going to get a home loan ever again. My clients, about 18 to 24 months after, as long as the rest of their financial profiles together, are able to qualify for a home loan. The FHA says they'll back a home loan 24 months after the bankruptcy filing. Great question. John, what are my options if I'm currently facing an eviction? That's a great question as well. A part of the moratorium are on evictions as well, but we are still seeing evictions come through. If the eviction was caused by a non-monetary default, meaning that you're violating a different covenant in the lease, like you weren't cutting your grass, or if the lease has ended and you're a holdover tenant, they still are able to evict. The landlord's still able to evict. So there's really no loan modifications for evictions. What I always recommend first, reaching out to the landlord, seeing if there's a deal to be made. Generally speaking, landlords don't want to go through with the evictions, the cost and expense of the eviction. So if they could work out something with you, that's the best. Bankruptcy will buy you a little time and get the eviction discharged, any liability from the eviction discharged. I don't necessarily recommend that for normal residential leases. The Chapter 7 will get rid of it. It'll buy you a little more time. Chapter 13 allows you to cure over time, but most leases are only 12 months, so there's really not enough time, and it really doesn't make sense. Yasmin, will my lender accept family support as a form of income for a loan modification? Great question. Absolutely. Any form of income that's verifiable, we can use when going through the loan modification process. So that's a great question, and that's another reason why you want to make sure things are set up properly going in, because many people will either understate their income, overstate expenses, and get them out of the right sweet spot to get that loan modification. So be very careful with that. Susan, is there a difference between refinancing and loan modification? Another great question. Absolutely. They're two totally different things. So when you're refinancing, basically you're going out to another bank and taking out a new loan that's going to pay off your current loan. that's another option. If you're in foreclosure, if you are in this forbearance, if your financials and credit are in a good state, you may want to look out to refinance, especially because right now interest rates are between 3 and 4%. If you have an interest rate that's 5, 6, 7%, you can really cut down on your monthly payment and cut down on the interest that you're paying. I personally refinanced from a 30 to a 15-year loan, and my payment basically stayed the same. The interest rate went down. So I absolutely recommend looking into refinance, even if you're not in forbearance. But if you have that 5, 6% interest rate, if you can save 1% or 2%, it's 100% worth it. So definitely check that out if you can. If I have a foreclosure sale date approaching, can filing bankruptcy help me? If so, what chapter? Another great question, and we're going to get into bankruptcies right now. So the short answer is yes. Once again, it's going to depend on what you want to do with your home. Are you trying to save your home? Are you trying to walk away? Or are you trying to sell it? So if you have a home that has a sale date and you really just need to get some more time and there's no equity in the home and you have other debts that you want to clean up, and you want to get rid of the deficiency balance, generally speaking, what I recommend is a Chapter 7. You file the Chapter 7 bankruptcy prior to the sale of the home. It's going to cancel the sale, probably get you another 4 or 5 months in the home, discharge any potential liability that would come from the sale of the home and any credit card debt that you have, and get you your fresh start. And then it takes about, like I said, 18 to 24 months to rebuild your credit afterwards. If you're looking to save the home or sell the home, what I recommend is a Chapter 13. So what the Chapter 13 allows you to do is a couple different things. First, the traditional Chapter 13 will allow you to cure the arrearage. That means make up the back payments over up to a 5-year payment plan. So if you were $60,000 behind, you have a 60-month payment plan, you pay your original payment, and then you make up the $1,000 a month or the $60,000 over that 5-year period. So your payment actually is going to go up. This is designed for somebody that has a short-term loss of income or other expenses that had them fall behind, but now they're in a better position and able to pay. So that basically guarantees you can save your home as long as you can make those payments. Another option in Chapter 13 is what's called mortgage modification mediation. Basically, it's what we talked about before, the loan modification process, but this way you have the court overseeing the process. You have a mediator, and you have the lender's representative come to the table. There's a documents portal. It makes it much more organized so that the lenders can't say, well, you're missing this document, you didn't provide this, because all the documents are in this portal. It makes it a very, very smooth process. Because if you miss one document, or if you miss one deadline, the lenders are just looking for a reason to say you don't qualify and move on to the next one. So you really got to be that one that's staying on top of everything, or have an attorney or another professional that is staying on top of the loan modification process. And the mortgage modification mediation through Chapter 13 makes a lot of sense. You also get into a potential payment immediately, first payment due approximately 30 days after you file the Chapter 13. So again, that as long as you file that Chapter 13 prior to the sale of your property, it'll cancel the sale. Now, if you can't afford the Chapter 13 payment, if you can't afford the modification payment, if you can't afford the cure payment, the other option would be to file the Chapter 13 and then sell the property to get your equity out of it through the Chapter 13 process. You do have to get court approval for it. Once again, this is not necessarily for a short sale. This is for when you have equity in the property. The good thing is if that is your homestead property and it is homestead protected, you can take that money and invest it into another homestead property. It will not go to other creditors. It will still remain homestead protected. So that's very, very important to know and understand the Chapter 13 process. Also, if you have a larger amount that's owed and you can't make it up over a 5-year period, there is something called a Chapter 11 and a Subchapter 5 Chapter 11, which is a larger version of the 13, where you can get into a payment plan up to the length of a loan. So instead of 5 years, you can go up to the 30-year 30-year amortization, which can save you a lot of money. It's there too. So I hope that answers the questions. I know that was a really long answer for a short question. Let me get back to questions here. Steve, good morning. right back at you. Love the car. Glenn, hey, my pleasure. Thanks for all the good work you're doing. Let's connect soon, my friend. Lydia, what happens to my HOA debt if I lose my property at a mortgage foreclosure sale? Another great question. So actually, in Florida, the HOA debt is personal. So they could come after you personally. Generally speaking, it just sticks with the property. So the association, if the association's foreclosing and somebody purchases from the association, the money will go to the association from that purchase. If it's a foreclosure from the first mortgage, generally speaking, the association does not get anything. Another little known fact, the association actually primes any second mortgage or beyond. So if you have two mortgages and an association, the association is second in line. So it'd be the primary mortgage, association, then your line of credit or second mortgage. But they can come after you personally. So be very, very careful with association news. We have many clients that, especially after the last foreclosure crisis, years later, we had to deal with judgments from associations. So be careful with that. Mr. Well, Jason Well, thanks for watching. If you need a great realtor and you're going through this, highly recommend Jason. He's doing a lot of great work out there. So shout out to him. Andy, what is the time window for the mortgage answer about the modification loans? Great question. Really depends on your lender. We've gotten them back as quick as 4 weeks. Generally speaking, that sweet spot is 1 to 3 months, probably 6 to 8 weeks being the average. And there's a lot of back and forth. So whether you're working with us, somebody else doing on your own, don't be upset when we say, hey, we need an updated bank statement. We need this. Just work with us or work with the lender. I know it's very frustrating, especially dealing with something as serious as your home. I can report that this time around, the lenders are in a better position. Their systems are much better. They were trying to, as they say, build the plane while it's flying back in 2007, 2008. It was a mess. I mean, it was taking months and months and months for the loan modifications to even get reviewed. The benefit to some homeowners, though, especially the ones that were underwater or had no equity in their home, because they were so disorganized, I mean, we were seeing foreclosures take years and years, and the system was just a mess. This time around, I don't see that happening. That everything's a little more organized. There's equity in the property, so it doesn't make sense, like I said before, to just delay the process. If you have a home that has equity in it, sell it, get the lender paid off, take your equity, and move on. If you do have the finances to save the home and you want to save the home, of course you can do that as well. Jose, let's see, that's a good question too. I was told I'm on forbearance. I can't refinance. Is that true? That's a lie. So whoever told you that is a lie. Maybe they won't refinance with that bank. So the lender isn't required to refinance you. So if you had a loan with PNC and they were in forbearance and you try to refinance with PNC, that might be a rule that they have, but you can certainly go to Chase and get a refinance loan with them that would take out PNC. So when you think about forbearance is just a delay, right? You have no payment during that time, and you should not be negatively impacted during whatever time that is. When you think of refinance, basically you're qualifying for a new loan with a new lender. It can be with the same lender as well, but what I would recommend doing is getting a mortgage broker, Jose, that will go out there and basically shop your refinance and get you the best deal possible instead of just going to one bank. So I hope that answers your question. If you need any help with that offline, feel free to message me as well. Melissa, to save money, should I file my case pro se and then hire an attorney later? So pro se means basically you're going alone. You're going to file a bankruptcy. You're going to represent yourself in foreclosure court alone. I don't recommend doing it. Find a specialist. Find somebody that knows the ins and outs of the system. It would be like me getting a speeding ticket and hiring one of my bankruptcy attorneys to represent me. They're fantastic attorneys, but they don't know how the speeding ticket system works. So we'll go to Ticket Clinic or one of these other guys that deals with it every day, and they'll do it the right way and they'll get us the best result. Same thing with loan modifications or bankruptcies. Go to somebody that deals with it every day. They're going to know the ins and outs. I in my life, I enjoy just working with professionals, whether it be my CPA, whether it be the restaurants that I go to with the professional chefs and staff. Shout out to Cafe Europa and one of my new favorites, Eddie V's as well. You're just going to have a better experience if you work with professionals. If you're working with people that don't do it on a daily basis, they're going to be learning as they go through it, and you certainly don't want to pay for somebody that's going to learn, especially if you're doing it on an hourly basis. Most of our work is on a flat fee basis, but if you're doing it on an hourly basis, you're basically paying people to learn. I recommend getting with somebody that does this all the time. We certainly deal with this every day. We do free consultations 6 days a week. So if you ever need help, this is a really important subject because a lot of family homes are at risk. The latest numbers that I saw, 10 million homes are in forbearance or default right now out of 80 million homeowners. So 80 million homeowners that live in the home. 10 million says 12.5% of people. So there's a lot of people throughout the United States that are really going to struggle as soon as this forbearance ends. So really take it serious. I know that there's the pandemic depression's real, but this is the time to get everything organized because you want to be on day one when that expires fixing this so that you're not getting hit with penalty, interest, attorney's fees, all of that. So are there any other questions? Jose, you're certainly welcome. If there's any other questions, I'll certainly answer that. If not, make sure that you go to vanhornlawgroup.com, our website. We're actually updating our website, so check back. We're probably about a month or two away, and we're going to have even more helpful information on there. If you need to get in contact with me, you can email me directly, chad@cvhlawgroup.com. You can set a free appointment at chadvh.com. I have 2 books out there, The Debt Life, stories about loan modifications and other things, and Bankruptcy in Florida, the different options. We also have another one coming out in Spanish. So for our Spanish speakers, we have a Spanish-speaking attorney that's doing consultations. He's basically working 7 days a week now. So John Voss, great work. If you need any help, please reach out to me at any time. I know how stressful this can be. Thanks again for joining me for this episode. I hope this topic helps you in the future. As always, I wish you the best of luck, and I'll see you in 2 weeks for the next episode of The Debt Life. Thanks, guys.